Hey, it's Pete. Hope you're having a great weekend. In today's episode of Stock Trading Pro, we're going to actually cover last week's sector rotation and how that is translating into the best stocks to buy now, heading into the week of April 18th, 2022. What's super interesting about this is we finally have a two-sided market where we're able to trade with conviction on the long side and buy stocks, but also at the same time, just take out outright short selling ideas or use some of those weaker stocks, especially in the technology area, as we're about to cover in this video, to hedge your long positions so that the hedges are making money when the market goes down, thereby protecting some of those profits on the stocks that you bought that you would like to hold. What I'm going to ask you to do now is just take a quick snapshot of this, pull it up for you quick. This is the list of the top stocks that meet all the top criteria for order flow heading into the week. So that'll give you a jumping off point before you watch this video and we go sector by sector and give you the best stocks to buy now, as well as which stocks line up as short sale opportunities. And believe it or not, technology is not the only one. So if you find this video helpful, please do me a favor, leave some comments below the video. If you have any follow-up, I'd love to get back to you. I always get back to you as soon as I can. But more importantly, if you find this stuff valuable, make sure you subscribe and smash that like button. I'd really appreciate it. Have an awesome day, and let's make next week a really profitable one. Take care. Hey everybody, it's Pete. Hope you're having a great weekend. Recharging, hopefully, after what was a pretty exhausting week of trading. Some opportunity. Elon Musk contributed to that, that's for sure. But what we're going to do here today is we're going to break down the rotation from the start of the week, the end of the week, and what we're looking at heading into next week. Just as a very high level, before we get into it, healthcare and consumer defensive remain strong. Energy stocks were right on the bubble of breaking out, did not necessarily break out, but sitting there. And technology just getting absolutely hammered. So you can see we started the week out here in that mode where it looked like energy was kind of catching a bid. And we actually, last week, if you remember, we talked about the XLE and the breakout level that we're watching in the XLE, which is going back a few years, got right back up to that $80 level, kind of poked its way through, still valid. And you can see the profit potential. We talked about another 20% heading up towards that 100 level. So energy is still there, but it was really the XLV and healthcare stocks that carried the load. They had actually a pause last week where a few of them took a hit, but overall still the strongest group by quite a bit. So this really got dragged down by the rest of the market. So even if we bring over the three major indices, which we're going to bring in a second in a bigger way, we are clearly well offered in the big picture. NASDAQ and tech stocks were carrying us higher for the better part of 2.5 weeks. That mojo is gone, especially now at the specter of the next interest rate hike. And then literally the Fed talking about it pretty aggressively. It looks like it's going to be more leaning towards the half a basis point than the quarter. So that's actually how the week started. But one of the things I really spend a lot of time on is you need to pay attention to the relationships of how it's unfolding, both from one day to the week to the month. And the month remained pretty strong, but the month is really mostly based on that run after the Fed. There's really no other way to put it. So this is still kind of factored in, but it's slowly working its way out. And I'll show you what that looks like in a second as we get down to the bottom. So from a day-to-day perspective, it's been mostly selling or neutral at best. As you can see here, nothing really that red, nothing really that weak. Consumer defensive, consumer staples, whatever you want to call it, depending on the software. That's exactly what has been near the top of the list. So it's really those three that have been in play. The utilities and real estate to a little bit less degree. And we're going to see as the week is unfolding, basic materials starting to work their way up the list as well. Financials, look, they actually had pretty decent earnings. Citigroup, Morgan Stanley, and Goldman Sachs all did. Wells Fargo and JP Morgan did not. Another one that actually had some pretty interesting price action was BBBY, obviously not a financial stock, but opened lower, had a big reversal. So you really need to be on your tape reading right now. You really need to be on your order flow. More importantly, though, you really need to be on the objective of the time frame that you're looking to place that trade. By far, some of the biggest challenges that we see to new members coming into the community is not understanding what their objective is before they get into the trade, and then reading the tape in the appropriate charts for the time frame that they plan to be in the trade. And we get a lot of questions about the one price, the open price, which is in stacking the order flow education. And it's misused or used inappropriately because people are always asking me which one. It's not which one, it's which group of opening prices matter to the objective, both for your initial profit target, your order flow for tape reading, as well as understanding when and if it's changed so you can adapt, or quite frankly, when it's still in play so that you can hang on to those winners. And it's that adjustment that really separates somebody who says, I know what I'm doing, but I'm still not making money. It's making those adjustments and pulling yourself out of the absolutes. Bull flag must go up, that kind of stuff. There's absolutely what we're supposed to do, but then there's what's probably going to happen next. And a lot of people can't separate those two, which is why some smart traders struggle. So you can see as the daily performances unfolded, we really did not have anything outstanding on a 1 to 2 day basis. Now, what was ironic here was Tuesday heading into Wednesday, heading into Thursday, was the reversal, specifically in the SPY. And if we bring this in a little, actually, let me go on the hourly chart. It's probably a little bit easier. The sell-off here on the 12th, and then the rally on the 13th, and then the decline on the 14th. The back and forth was just a thing to behold, especially if you're in the Order Flow Pro and you're watching all the advanced stuff, the saturation play and all that kind of stuff. It pretty much plays out exactly as we could map out in watching that 3 to 5 day cycle. It's the traders that are not paying attention and don't have the tape reading reference and don't even use it, quite honestly, that have been a little bit frustrated. So you can see the rotation here from specifically over the 12th through the 14th and how that played itself out. So the 12th was pretty ugly. This day here on the 13th was actually pretty strong, although it doesn't look it from a percentage. But you can clearly see here that we actually rallied for almost the entire day, but that was compared to the previous day. And then the last day heading into the end of the week, we actually on Thursday, heading into Thursday, actually looked pretty strong. So this is actually heading into Thursday. And now heading into next Monday, it's mostly a bearish picture, quite honestly, other than energy and basic materials here. Consumer defensive is still there, but they're a little bit overbought, such as Costco, Walmart. We've also talked about Dollar Tree, Dollar General. Dollar Tree is probably the biggest example that we've been talking about as far as beyond the optimal entry. So the consumer defensive is still in play, but after this bullish U-turn, it's well beyond the optimal entry. You can see it's making new highs on lower volume. So not necessarily something I'm looking for a new swing trade. I'm looking for this and then trading into a bullish U-turn for the next move. Okay, so that's the general breakdown. We'll get into a little bit deeper. And we're actually going to start here from a percentage basis. As of Friday, the OIH again resting near the breakout level. You can see 2 well-bid days heading into the end of the week. And GDX metals and miners still there as well. But we want to bring this in a little bit more obvious fashion to pay attention to what's going on. These are all weekly charts, so we're looking at anything that on the left-hand side is the 3 major indices. So we basically in the SPY and the Qs, and for the most part over here at the XLK as well. You really don't need the Qs on the XLK. They're pretty similar. But the massive rally into melted candles in 2 weeks of well offered. So you got well offered, and closing on the lows. The Dow is hanging in there a little bit, and that's mostly because of what's going over here. You can see basic materials is holding the bid, and industrials perked up a little bit towards the end of the week, the XLI. And I just want to show you that for a second, because Caterpillar, if you didn't happen to see it, we were talking about it basically all day on Friday. And that giant green candle pretty much carried the Dow towards the end of the week. And that was really what happened on Friday. It was just amazing. Volume was awesome. And that's the frustrating thing about Caterpillar. You get a day like this where you could make your entire month on that one trade with the right position sizing and holding the trade long enough. But then you get a bunch of these melted candles where the stock does nothing for 8 or 10 days in between there. So again, it's one of those questions you get, which stock should be in our list on a daily basis. This one should be. You just got to really be on top of, again, stacking the order flow, having your chart set up properly, and being ready for it. So that's the breakdown as far as what's holding up the Dow and why it didn't close weaker as the other two did. I am looking for healthcare stocks to catch a bid here again coming into the week. Again, here's the industrials. Looks weaker than it actually traded last week because a few of them actually caught a bid. But from a bigger picture right now, we're looking at basic materials, We're continuing to look at consumer staples from the bullish side, and obviously energy. That hasn't changed. Financials, we were looking for a little bit better move off of the earnings. We did not get it. So financials is going to be on the bearish side. Communication services on the bearish side. So we'll be looking at Snap and FB Meta Platforms and those guys. As far as aggressive on the short sale side of things, it's in technology. There's really no other way to put it. And I really want to bring this home in a way where I want to highlight this. This is the setup that I have. And again, most of you know the custom scripts that we have in the Order Flow Pro. We break this down in multiple ways. And this is one of the ways that we stack the order flow, both on the daily charts as well as the intraday charts. But if we stick with just looking at what it's actually telling us, this is basically telling us stocks that are positive on the monthly chart by at least $1 and positive on the weekly chart, just positive, not even positive by a certain amount. And this technology list here is clearly, you're not looking at anything here that is what you might call a large cap tech stock. CRWD, obviously, in the group that it's in with cybersecurity is still strong. But this net change bar from the open on the weekly is showing you that this group of stocks here were the strongest, and specifically these two. Okay. You can see energy had the largest list as well. Again, positive from the opening price of April. And net change bar from the open is Wednesday's change from Monday's opening price, the weekly change from Monday. So you can see here just from these pockets of opportunity that energy has the strongest presence, as well as a couple of consumer cyclicals. But again, the main consumer cyclicals here on the weekly chart, Marriott holding the bid, so to speak, and a few of the other hotel type stocks held the bid as well. Airlines also held the bid as well, which you can see over here at Delta Airlines up 15% from Monday's opening price. So we had Delta and Caterpillar and Raytheon. So this is a little bit of a pocket of opportunity I'm going to be keeping an eye on. Now, what's interesting here is if we flip the script here on the technology side of things and we go negative and negative, and then sort this by change from the open for the week, you'll start to see a lot of the larger cap stocks, AMD, Coin, Run, NVIDIA especially is just getting absolutely hammered. Microsoft is actually here down 4% for the week. And NVIDIA had that big breakdown level that we've been watching for a while now and traded into its second. Let me actually pull that on the daily chart so it's a little bit more obvious. And let me get the volume off of there. Hide that for a second. So this was the breakdown level that we've been watching, and you can see we zoomed it out. It's got some room to go through there. But what's significant here is bearish gap, bearish engulfed candlestick, inside candlestick, bearish engulfed candlestick, resting right at that level. So if NVIDIA breaks down, the tech area is going to break down in a much, much heavier way. And you can see how heavily weighted it is here. As far as the financial stocks, I'm actually going to do the same twist here with the financial stocks, bringing this over where we're going to go negative for the month of April and negative for the week. Negative by $1 and negative for the month and negative for the week. And you can see here some of the larger institutions, PayPal being in there, UPST being in there. JP Morgan had really, really bad earnings, and the Bitcoin stuff has not caught a bid either. So there's plenty on the long side. Again, industrials are kind of sneaking up. Basic materials have had a decent week. Alcoa looks like it finally bottomed out as well. We spent a lot of time talking about that after Alcoa was negative for I think 8 days in a row, if I'm not mistaken. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row. Got this swing low here, went well bid, and the stock rallied for a few days. We're actually looking for it to get back up to that 93 area. We'll see. I don't like the fact that it closed near the low, but it's still well bid. So that's really how I'm breaking it down this week. The majority of the ideas that I'm looking at right now are going to be shorting tech stocks, shorting financial stocks, buying consumer defensive stocks, looking for finally, will energy finally catch a bid, and looking for healthcare stocks to mount a challenge back after they pulled back just a little bit. So that's really where the rotation is for me this week, heading into the week of April 18th. The one thing I will promise you is we are going to continue to really make the call on the order flow and the tape reading on an hour by hour and day by day basis. There will be plenty of opportunity. The only people that are frustrated right now are those that are too rigid in allowing the market to unfold. There is plenty of opportunity. I know there's been some great opportunities, even on Tesla. We talked about on that giant, the one giant day that, again, Sari was trading this pretty actively. And we zoom it down here. Just one day, again, one good day of trading pays for your entire month. So these 2 days here, and I guess we can really bring that home in the market here. These 2 days here, the process that we use to read the tape, read the order flow, and read the market internals were just two masterclasses in understanding how to read the tape and how to adapt which side of the market to be aggressive on, because this was a pretty heavy day of selling. And then the next day, the market internals did not imply any further selling at all. And if you just listen to the tape and listen to what I was explaining all day during the day, you had plenty of opportunity on both of these days. So again, just a recap, we're looking for tech to follow through to the downside, financial to follow through to the downside. We're looking for healthcare to recover and find some buying after a week of selling. Working our way over into consumer staples as well on the long side. All right. Hope you're having a great weekend. I will speak to everybody soon. Thank you so much.